Respected presenters, dear participants, ladies and gentlemen. The subject of my presentation is the digital banking in Turkey. Providing banking services through the digital platform with customers is referred as digital banking. As opposed to traditional banking, bank customers don't need to physically visit a bank branch to carry out their banking services in the digital banking. Digitalization process in the banking started with the use of ATM machines and telephone banking to take the burden off bank branches in some transactions. It is extended by the use of bank cards and POS machines in shopping transactions. It is further accelerated by online banking and mobile banking. Eventually, it is so developed that it became an end via the emergence of fully digitalized banks without physical branches. With the use of the Internet, the term online or the Internet banking emerged first. Online banking refers to realize the banking transactions via computers. The first banking institution that offered online banking services is Stanford Federal Credit Union of the USA in 1994. Later, with the advance of technology and digitalization, the term mobile banking is added into the literature of banking. Mobile banking refers to realize the banking transactions through mobile devices such as smartphones or tablets. Thus, the digital banking includes both online banking and mobile banking. Electronic money institutions and payment institutions are also called as bank by confusion. Only 3 out of the top 10 e-finance institutions are real banks, if a bank is described as a financial institution which is licensed to receive deposits and make loans. COVID-19 pandemic has accelerated banks' involvement in the digital banking products and services. Especially the use of contactless cards has exploded during the pandemic since it allows payment without touching a POS machine. The importance of digital banking has been better understood by the COVID-19 pandemic. During the pandemic, bank branches have become dysfunctional. Time to time, they have lost their total accessibility. Even if they are reached, customers must wait hours on the queues to realize their transactions due to the safety applications. Under these conditions, digital banking have become more efficient and safer than traditional banking. When we look at the drawbacks of digital banking, security, downtime, and learning curve are identified as drawbacks of digital banking. The most important drawback of digital banking is its security. Digital banking customers should always be on the alert against frauds and hacks. Their username and password could be hacked by various hacking methods, such as phishing, identity theft, and keylogging. For their security precautions, digital banking customers should change their passwords regularly and keep their passwords confidential. Avoid using public networks and devices to access digital banking. Refrain from sharing their confidential information. Use antivirus protected systems and avoid logging into fake banking websites. The second drawback of digital banking is downtime. Since digital banking works through the internet system without physical branches, customers can face trouble if they couldn't reach the internet. On the other hand, customers can also face trouble if the bank experiences problems in its online or mobile banking applications. The last drawback of digital banking is learning curve. Online and mobile banking is considered to be a complex for some group of customers, especially elderly customers. Especially elderly customers and customers who are unfamiliar to information and communication technologies prefer banks with physical branches. Customers prefer human interaction in some ambiguous transactions. When we look at the benefits of digital banking is convenient and efficient way of realizing banking transactions. In digital banking, bank customers don't have to wait in lines in bank branches or force themselves to catch working hours of bank branches. Thus, the customers save their time and reduce their transaction costs via using digital banking platforms. Digital banking reduces banking fees and increases interest rates on bank deposits. Because digital banking reduces the cost of banks, banks can charge lower or no fees for banking transactions and offer higher interest rates on bank deposits. Digital banking is healthier than traditional banking, especially in times of epidemics. Customers don't have to stay in crowded environments and touch paper money, records, and pencils. Digital banking is environmentally friendly since it reduces the use of papers in the banking transactions. Bank customers still have records of their transactions and save them in their computers. Digital banking allows bank customers to set up automatic payments. Digital banking contributes and supports online shopping. Digital banking helps especially the poor reach banking products and services. Digital banking reduces the transaction cost of the poor people and thus help eradicating poverty. Digital banking allows cashless payments and thus reduce the risk of counterfeit currency. Digital banking restricts the circulation of black money. Digital banking lowers the minting demands of a currency. Regulations in Turkey consider digital banks as fully digitalized banks without physical branches, while online and mobile banking services provided by hybrid banks are called electronic banking. The regulation on the operating principles of digital banks and service model banking was published in the official Gazette on 29 December 2021. The regulation defines digital banks as the credit institution that provides banking services mainly through electronic banking services distribution channels instead of physical branches. Digitalization in the banking sector has led to decrease in the number of bank branches in Turkey. The COVID-19 pandemic has also accelerated banks' involvement in the digital banking products and services. Between 2016 and 2021, the number of bank branches in Turkey decreased by 2%. Branch use of frequency research indicates that about 55% of bank customers state that they are not visiting banks' branches at all. Share of digital banking in general purpose loans increased from 13% to 37%. During the same period, share of mobile loans in digital lending surged from 74% to 93%. Major banks carry out about 70% of their transactions via digital banking in Turkey. No fees and commissions, simpler customer experience, and higher interest rates on deposits are identified as top 3 reasons for working with a digital bank in Turkey. On the other hand, salary being deposited to a different bank is identified as the main reason for not using a digital bank in Turkey. Thank you very much for your kind listening.